Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Ethereum, and we're going to be discussing the Heikin-Ashi candles. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and check out Into the Cryptoverse Premium at intothecryptoverse.com. Now, the reason we're doing this video is because yesterday I put out a very similar video on Bitcoin. And I think a lot of people sort of enjoy these types of videos where you look at these candles in a different way. And so I wanted to do the same exercise for Ethereum as we have done in the past. Now, if you look at normal monthly candles for Ethereum, they can often be all over the place and sending very mixed signals depending on, how much faith you put into, moves back or say green candles and are they engulfing and all that sort of stuff. But one of the interesting things is that, despite these bear market rallies that Ethereum has had, if you just look at the Heikin-Ashi candles, what you'll notice is that they've essentially been red since January. Okay. And in the same way that Bitcoin has been red since November, this is basically just marked a fairly structural bear market for Ethereum. And I've heard a lot this year that Ethereum is showing a lot of strength, and that it's about to break out and whatnot. And I will say, it has shown a lot of relative strength, especially with respect to a lot of other cryptocurrencies. But at the end of the day, it still just simply has been a bear market where Ethereum, from its all-time high, has dropped about 82% or so. Okay, so all things considered, this has been a fairly structural bear market for Ethereum so far. Now, it's always useful, though, sort of look to see where we are within this bear market and these monthly Heikin-Ashi candles and what has happened in the past. And what you may notice is that this bear market for Ethereum so far, when measured by just looking at the Heikin-Ashi candles, you will notice has been going on, well, it's 11 bars, but you have to add one, right? Because there's really 12 of these candles in here. 12 monthly candles. Now, if you're unfamiliar with what the Heikin-Ashi candles are, you can see the formulas right here, right? So the close is equal to 1/4 of, in parentheses, the high plus the low plus the open plus the close. The open is equal to 1/2 of the open of the previous bar plus the close of the previous bar, so you're taking the average. The high is equal to the maximum of the high or the open or the close. You might say, well, again, isn't the maximum always going to be the high? Remember, the open is based on a previous candle, not the current one. And so the max is not always just the high for that candle. And then the low is the minimum of the low, the open, and the close. And when you do it like that, and you don't put so much weight into, where it might randomly close at a given minute based on what we define as important, you get candles that tell a somewhat more compelling story. Now, imagine if you had taken this strategy back in 2018. There was one false signal. So this strategy is not a perfect strategy to just say, well, if it flips green, that means we're back in a bull market. That's not necessarily true. Remember, one thing that's key for a bull market is to see large candle bodies, upper shadows, and no lower shadows, or very few of them. If you have a single candle that's green, but it has a lower shadow and an upper shadow, and that's all you get, and that's not really a confirmation of a major trend reversal. On the other hand, this was a trend reversal where you saw a green monthly candle that had no lower shadow. And this was back in April of 2019. And again, at the time, the price of Ethereum was only about $140. And what's interesting is, had you looked at this red candle over here and said, all right, it just simply is a bear market, that would have been around $800, right? It would have been, of course, past the all-time high. And if you had just been patient and waited until you saw a monthly Heikin-Ashi flip green with no lower shadow, you would have gotten in at maybe around 150 or so, which was not the bottom, right? It was still 2x off the bottom, but it would have been better than, buying in every bear market rally every step of the way, right? And that's sort of the argument, is that, and this is what I've reminded people time and time again during these bear markets, is that it's easy to, sort of jump back in during all of these bear market rallies, but oftentimes the bear market can just sort of drag on and on and on, and these bear market rallies serve a purpose, and that's sort of suck in more money before ultimately taking another leg down. So again, if you want to look at the Heikin-Ashi candles, what it shows right now and what it was showing, there was at least a bit of a fight going on in the summertime. And I mean, look, Ethereum has been stronger than a lot of cryptocurrencies during this bear market so far. Doesn't mean it's going to stay like that forever, but so far it has. I mean, that's just a fact. Um, and what you'll notice is that there were a lot of upper shadows. They were still red, right? They were all still red, showing that the price was still generally trending down, right? Generally trending down, counter trend rallies aside. And this monthly candle so far does not even show an upper shadow, right? The top of this candle here, because it's based on the previous candle, the top of it is all the way at 1458, right? So currently Ethereum's trading at 1297. So again, right now, this is not even showing an upper shadow at the moment. And so, I mean, you know, if you want to be very, very cautious and wait for this to flip green, then again, the argument is that, yeah, there's a good chance you'll miss whatever that local bottom or macro bottom is, right? There's a chance that that's what happens. And again, if you had waited for it to turn green over here, you would have missed the bottom. But the people who maybe wait for this to turn green say, yeah, maybe I missed the bottom, but I also didn't buy every single short-term pump along the way, and I didn't lose all my money, right? So they waited, they sat on cash until the market looked better. Now, I am not a person that waits for something like this to occur in crypto before I'm ready to sort of get back in, so to speak. I want to be clear about that. I use a lot of indicators, but this is just one, right? I mean, like, if you're looking at this in the future and it's flipping green and you're not really seeing any lower shadows and you're seeing these large candle bodies, then you might have to start to think, wait a second, right? Maybe this is actually a more sustained move. So far, Ethereum has not been showing any types of sustained moves, and I've been fairly adamant that I would like to see it eventually head home. It has not made it there yet, but it tends to make it there during during sort of these bear markets. Some of these bear markets are a bit more brutal than others, but when we come out of this regression band, we typically tend to find our way back home eventually. Whether we go sideways until it catches up or whether we capitulate down, of course, is up for interpretation or up for your opinion, but I do think eventually we will get down into the lower regression band. I do think it's a matter of time, and I think it's necessary before you see the next bull market. Speaking of the next bull market, one thing to consider is that even though the bottom was in back in December 2018, we still had several monthly Heikin-Ashi candles that were red after this sort of brief bull market. So if you were to take this here, this was 12 months total. If we take away the green one, then we had another, here we had another, so if this is 5 bars, so 6 months, so that 18 months so far, then 19, 20 months. So we actually had 20 red Heikin-Ashi candles on the monthly for Ethereum in the last bear market / accumulation phase before we got in to the bull market that took us to new highs. So far, this one, we're looking at 12 monthly candles that are red, right? So I think the idea, and I want to stress this, is that I want people's expectations to be somewhat tempered. Whenever the bottom is in, and I know a lot of people think it already is on Ethereum, and they've been saying it since June, and so far they've been right? So far they've been right, so I'm not going to take that away from them. I mean, so far it's true. Even when the bottom's in, even if you assume the bottom is already in, it still likely takes a while, right? Like, I mean, we don't typically then just blast off to new all-time highs immediately. And so I do think it's worthwhile to consider that you often get some type of accumulation phase. And you might say, well, what is an accumulation phase? Does that just mean we go sideways for a year? Well, look at this. I mean, we rallied back over here. Ethereum rallied from $80 up to like almost $400. It was a 5x move. I would still call it accumulation phase, right? As silly as it sounds, when you're talking about crypto that can go up 50x in a bull market, a 5x move just to give it all back over the next half year, to me, is just sort of a macro accumulation phase. Again, as silly as it sounds, I get that a 5x move under most circumstances would not be considered accumulation, but for assets as volatile as cryptocurrencies, I think you can make the argument that that is in fact the case. So imagine if Ethereum does something similar, right, where it comes down and then rallies up. I mean, this could still just simply be an accumulation phase before getting into another bull market out, maybe in a year or two. So just something to consider. Another way to look at these, of course, are to look at weekly on the weekly time frame. And if you look at it like this, what you'll notice is that, I mean, all of these have just been bear market rallies, right? Like every time it's turned green so far, it's just been a counter trend rally that hasn't actually led to new highs. So far, all it's been leading to are lower highs, right? Just one lower high after another so far. Again, when you switch it over a month to the monthly, the bear market rallies don't even really show up, right? I mean, they don't even really show up when you look at it on the monthly time frame. If you look at it on a 2-week time frame, they still show up, but again, there's only really 2 major counter trend rallies. That was one back in March, and then another one here, in the summertime. And then, of course, we could go to, say, 3-month Heikin-Ashi candles. What you'll notice in 2018 is that we had 4 of them in a row, right? 4 of them in a row. And then here we're currently looking at our 3rd one. So the next red one would be, of course, in if it were to play out, right? I mean, if we were to get another red one after this quarter, then that would be sort of the 4th one. And then you can see the last cycle after we had that 4th one, we were then in the accumulation phase, right? So it was 4 reds down, 2 green, 2 red, bull market. So far, it's 3 reds down, right? So if we had a 4th one that was down, then 2 greens, 2 reds, I mean, you're looking at I just get simply a very cyclical pattern, right? Is just playing out where maybe you get some type of, you could still see new lows ahead, but then as you get further out in 2023, right, like just an accumulation phase, hopefully preceding another bull market out in like 2024, 2025 time frame. I think that's what we're sort of looking at right now. You can also look at it on the 6-month time frame if you want. And on the 6-month time frame, it's even more interesting because what this shows is that you had 4 of them before the next bull market, right? And the next bull market on the 6-month time frame did not start until the summer of 2020. If you were to equate that to this time, it would be like summer of 2024. We're currently in the first red one when you look at the Heikin-Ashi candles because the first one just sort of has the wick, right? This one again here, this was also started in July 2018. This one here is in July of 2020. So even on the lower time frames, we were sort of bouncing up and down, and Ethereum went up like 4 or 5x. The 6-month Heikin-Ashi candles didn't care, right? Large candle bodies with even no upper shadows, just showing sort of just a slow bleed and sort of a slow accumulation phase before the next bull market. So arguably, we still have potentially at least 2 or 3 more of these. And again, if you look at lower time frames, it doesn't mean the price is necessarily just going down, right? It could still go up and then come back down. It's just not always represented on 6-month time frames because of how long that is. But again, this sort of just gives you some perspective as to where we are within the bear market / accumulation phase before hopefully the next bull market. If you guys like the content, make sure you subscribe, give the video a thumbs up, and check out Into the Cryptoverse Premium at intothecryptoverse.com. I'll see you guys next time. Bye.